welcome to Compass Global Markets Weekly Update. I'm Tony Boyajian. I'm going to kick off by talking about the US economy. The US tax reform package, which we've talked about in the past, will boost US economic growth over the next 2 years. In fact, corporate earnings growth in the United States is set to increase by over 10% over the next 2 years. Now, the US Federal Reserve may need to increase interest rates faster than expected to stop the economy from overheating. And that's the real risk, especially if inflation and wages growth continue to pick up. Now, the increase in the US government spending, which was approved last week, will also raise the US budget deficit from 3% to 5%. Now, this increased debt burden is going to give the government, the US government, less flexibility to manage a crisis if a recession or an economic downturn eventuated there as well. So that's the major risk going forward for the US market. Now, last week we saw US inflation numbers for CPI numbers for January come in around about 2.1% per annum. Now, this is not the Fed's preferred measure of inflation. It's what they call the PCE deflator. That's out on the 2nd of March, so look for that as a better indicator of future interest rate direction. So the market is still focusing on 3 to 4 interest rate rises in the US this year. Now, US Fed Chair Jerome Powell, who obviously replaced Janet Yellen, will speak for the first time on next week, actually the 28th of February, in front of the testimony to Congress. This will be his inaugural speech. No doubt the market will be watching with bated breath. Now, moving to local market activities, the Australian economy continues to be ruled by domestic factors. We've seen the RBA leave interest rates alone for the 16th consecutive month. They've mentioned quite clearly that interest rates will only be adjusted, in other words, interest rates will only move if wages growth and inflation data does. And at the moment, those two particular pieces of information, wages growth and inflation, remain quite subdued. So the RBA has cautioned that any pickup in wages growth will be kind of gradual, very slow, very protracted. Now, this will weigh on household incomes and retail sales going forward, and this is a risk that the economy may remain in this tight household consumption concern factor. We saw employment numbers for Australia for the month of January come out last week as well. Full-time jobs actually fell by 50,000. Part-time jobs rose by almost 66,000. The unemployment rate remains unchanged at 5.5%, but more importantly, hours worked fell by around 1.5%. And the real concern about the employment picture in Australia is this underemployment number. Now, underemployment means people have a job, but they're seeking more hours. And there are a lot of people who are working flexible hours, working part-time, working 2 or 3 days a week, and as a result they are taking home less pay. And that's one of the reasons why wages growth has remained very low in Australia, in fact at record lows. So the big data highlight this week will be on Wednesday. We get the 4th quarter wage price index out. Let's have a look at that to see if there's any sign of a pickup in wages growth. Otherwise, we'll probably see the Australian dollar remain in this tight range between 77.5 and perhaps 79.5 cents for the short term. Going forward, don't forget, of course, today we've got the Reserve Bank minutes coming out from the previous board meeting. I wish you all a very good week. Thanks for watching. I'm Tony Boyajian, Compass Global Markets.